Hello, good morning. Let's confirm we're on the same page here. So if you can see my screen and you can hear my voice clearly, kindly type in hi in the comment section so that we can get the session started. I would like to see some feedbacks, please. So while I load up my chat. Okay, 30240. Good morning. Thank you very much. 1314. Good morning to you. Thank you as well. Okay. So, it's a new week. I'm excited to welcome you to another beautiful session on the Extreme Speed. My name is Sheriff Daramola, and as usual, I will be your anchor for the next 1 hour, where we shall be evaluating the financial market using technical parameters to identify trading opportunities lining up for us today. So welcome once again, and today is the first day of the week, and you all know what we do here on the first day of the week. We tend to choose random pairs that we shall be deliberating for the week. So whatever pairs we deliberate on today or we review today shall be the pairs we will be monitoring throughout the week. So this is a very good opportunity for you if you have any pairs, commodities, options, or cryptos you want us to look at for today. This is a very good opportunity to drop them in the comment section so that I can incorporate it into our plans for this week. So with that being said, we will be diving right into the chat. But before we go into the chat now, let's quickly look at the economic calendar and let's see what are the major macroeconomic events we are going to be looking forward to for this week. All right, so on the economic calendar here, on Sunday, this has happened already. We had the monetary policy meeting for the Bank of Japan. Then today, later on today, we have the President's Lagarde speech coming up. That's the President of the European Central Bank. And I don't have any euro pair on my watch list for this week. So this is irrelevant to my expectations for this week. Then on Tuesday, we have the S&P publication for global CIPS services, PMI. And from the consensus here, we have 49.9% against the previous one. So there's really no change no change at all. So let's see how the data is going to come in and how participants in this market will be anticipating this event. Then we don't have any other macroeconomic event until Thursday. And on Thursday, we have 3 macroeconomic events that we will be looking forward to affect the US dollar pairs. And these are the durable goods order. Then we also have the GDP analyzed for quarter 4. Then the non-defense capital goods order, which is coming up on that same day. So these are the events we will be looking forward to for this week. And obviously, we shall be seeing the anticipation of this event, their reflection on the charts as price action. So with that being said, let's dive into the chart. And the first commodity we are going to be looking at this morning is the USOil. So diving right into the daily time frame here, let's zoom into what has been happening here in the last couple of months. So the current structure we have here is quite interesting. If you remember what our expectations were as at last week, we identified a reversal pattern here following the impulsive move that started from the 93.50 level, which took price into the lowest point it ever got in the last 1 year. That's the $70 level, and we saw a transition of price action into a structure that looks more like a double bottom structure, which from a technical standpoint is a strong reversal pattern. As you can see here, the lowest point is the $70 level here, and price was unable to break the previous low, so we had a new low, a higher low here, giving us a clue of a level of buying pressure coming in gradually as price action continue to find higher lows. Now, whenever we have a reversal pattern like this, like a double bottom structure, the next thing we want to be doing is to identify a neckline, which we shall be using to guide our trading activity. And if you look at the structure we have here, the $80 level lines up perfectly well with the neckline structure of this reversal pattern. And definitely we will be using the neckline as a yardstick for trading activity going forward. And to be sure that this reversal pattern is mature, we want to see an outright breakout of the neckline area, probably a retest of structure to incite a wave of bullish momentum. And if we look at what has been happening here since last week, we saw that we have a breakout of the neckline here, which also shares a confluence with the bearish trend line that has been guiding bearish momentum since the month of June. So look at what we have here. Hold on a second, let's see. So that's the month of June last year. We saw the high there, we saw the lower high here in the month of November. We saw another lower high here at the beginning of this year. So you can see after connecting the series of lower highs here, we have this bearish trend line. Now things got a little bit interesting when price action broke out of both the $80 level, a level which also shares a beautiful confluence with that bearish trend line, to emphasize that we are at a critical point in the market at that point. And following the breakout of that structure, we saw our price action was caught within a little consolidation phase, giving us a clue into the indecision in that market at that particular point in time. And whenever we have an indecision like this, like a channel, we definitely want to be patient to look out for either a breakout or breakdown of the channel. And with the way things are looking right now, and considering what happened on Friday, we saw the final breakout of the channel to the upside, and currently price is trading above the $80 level here. So with the situation we have here right now, how are we going to be seeing price action continue to climb to the upside in such a way that it continues into the $85 level here, or probably go as far as this trend line, maxing out at around the $92 level? That is one scenario we want to be looking forward to. Then the other possible scenario that could happen here is if this breakout turns out to be a false one, where we start seeing selling pressure bringing price back below the $80 level, a level which has been a strong selling niche in the past, to incite another wave of bearish momentum. So these are the situations we are looking forward to for this week. But to have a better perspective into what is really going on in this market, we would want to scale down to our lower time frame to see and understand what the structure we have here is transitioning into. So with this information we have here on the daily time frame, let's scale down to our 4 hours time frame, where we begin to see things a little bit clearer. So right now we are on the 4 hours time frame, and on the 4 hours time frame here, this is the situation we have. And remember, last week we were part of this bullish momentum that started above the $75 level, which we rode all the way into the $82 area here. Now, talking about the $82 level, if we look at what has been happening here since the month of November last year, you can see how the $82 level had been a major selling niche for participants in this market. We saw one happen here on Thursday. That was November 17th. Then we saw another one here later on in the month of November. Then the first week of December, we saw another selling pressure come in from that level. And since then, buyers have been unable to push price into that area, further emphasizing the strength of the sellers at this point. A couple of weeks ago, we saw another selling pressure come in at the $82 level, and last week trading session, we saw our price action approach the $82 level, and presently price is around that structure. So we are at a very critical point in time in the market right now, as the tendency of price moving either way is very possible here. Price could break out of the $82 level to incite another wave of bullish momentum, and we could have selling pressure resume again below the $82 level to incite a selling pressure, pushing price to the downside. So this is what we are going to be looking at right now. So what we're going to be doing now to make things clearer is to scale down to the 1 hour time frame. We want to see how participants in this market has been reacting to the $82 level since the beginning of this week to decide where its likely price action will be heading to this week. So in that regard, we'll scale down to the 1 hour time frame, and this is what I was able to identify on the 1 hour time frame. So I would like to zoom this a little bit closer so that we can see things clearly here. So that is the $82 level here, well identified here. So that's the $82 level. And one thing we noticed at the beginning of this week was that there was a bearish gap. As you can see, price closed at the $81.80 level last week, but opened at the $81.42 level here. So we had a huge gap here of about 50 cents gap we had around here. And one thing I noticed since the beginning of the week was the fact that price had been caught within this channel between the $81.80 level here, which I will be using as my resistance level for this week. And then we have the support level for this week sitting around the $81.20 level. And you know, from a technical standpoint, whenever we have a flat channel like this, we need to be very careful, remain patient to look out for a signal that will be giving us a leverage of where price action will be going for this week. So what we are going to be looking forward to now is either price does a breakdown of the structure to incite a bearish momentum. So if we see price breaking down the $81.20 level, we want to be selling the US oil, at least in the meantime. And if price breaks out of the $81.80 level, we look out for buying pressure around that area to join a rally to the upside. So this is a very simple setup we have here, and from the look of things, considering what has been happening here since the later part of last week, we can see that we have been witnessing bullish momentum since price tested the $78.50 level, and as soon as it got into the $81.80 area, we have been witnessing a consolidation phase here, which has a high chance of transitioning into a trend continuation pattern in the form of a bullish rectangle pattern. And if that is going to be, then a breakout of the $81.80 level will be giving us an opportunity to buy. So presently I have a position triggered right around the $81.80 level after citing that the structure. And for those who are taking advantage of that move there, well done for you for being on standby to catch that move. And for those who are not yet in this trade, well, it's a very good opportunity to buy at this point. And if at any point in time during the New York session we cite another breakout of the $82 level, remember how important the $82 level is. I shared this on the daily time frame where we identified the $82 level has a very strong selling niche in this market. So if price further breaks out of the $82 level with buy pressure coming in around that area on our lower time frame, it will be a very good opportunity to add more position to our existing trade. So on the US oil for today, I'm tending towards a bullish momentum for this week, and with the hopes that price will continue to climb, find higher highs, breaking out of the $82 level to give us more comfort to stay in this current position. However, in as much as we are looking for buying opportunity, we should not ignore the possibility that price could do some sell-offs at this point, breaking down the support level of this channel at the $81.20 level to incite a bearish momentum. So we want to be on standby to catch either of this move. So we are already in the bullish position right now. So if at any point price action takes us out of that bullish position, then we should be anticipating a breakdown of the $81.20 level to join a decline to the downside. So these are the scenarios we shall be looking forward to on the US oil for today and hopefully for this week. And whatever happens in the next 24 hours will further give us a platform to continue to guide our trading activity for this week. So if you have any questions regarding what I just explained so far, feel free to drop your inquiries in the comment section. As I will be willing to be of help in that regard. So if you think I need to shed more light in a particular aspect of what I just explained, feel free to drop your inquiries in the comment section. So I hope we are on the same page here. So I will try to check the comment section from time to time to see if there are any observations or inquiries in that regard. So with that being said, let's dive into the next option. So the next option we shall be looking at is the US tech. And in fact, the US tech was one of our most profitable trade for last week. If you remember, we had this buy position which we took advantage of, though we started the week last week on a bearish note after price rejected this the 11,500. We saw selling pressure around that area, which gave us that leverage to join a decline to the downside. And we were able to make about, let's see how many pips was that, about some 200 pips, 300 pips thereabout on one position, and we were lucky enough to have multiple entries on that one. So based on the current structure we have here on the daily time frame, first of all, the first thing we notice on this time frame is the fact that price action has been on a bearish momentum throughout the course of last year, and after connecting the series of lower highs, we were able to have this bearish trend line that has been guiding bearish momentum throughout last year. Now, zooming into what has been happening here in the month of June, we saw how the $11,000 level had continued to hold buy pressure for the last 6 months. So you can see around the $11,000 level here, we have been witnessing buy pressure. So this was a clue that the participants in this market saw the $11,000 mark as a cheap price to buy the US tech. And at the beginning of the year, we identified a reversal pattern right below the $11,000 level and exactly above this demand zone here at the 10,600. And one thing we said was that following this impulsive move, price action transitions into a double bottom structure as it was unable to break the previous low here, giving us further signal that there is a likelihood that buyers will come in from this point. And whenever we have a reversal pattern like this, the next thing we want to be doing is to identify the neckline area, which we shall be using to guide trading activity. And funny enough, the $11,000 level shares a beautiful confluence with the neckline area. We saw the breakout retest of the structure, giving us a confirmation to buy. That was a couple of weeks ago, and we rode the move all the way into the $11,700 zone here. So right now we are at a critical point in this market as price action, as soon as it tests the 11,700, 11,500 area, we have been witnessing some consolidation phase around here, further emphasizing the indecision in this market. Coupled with the fact that we have an indecision here is the fact that price action is around the bearish trend line, which has been guiding bearish momentum throughout the course of last year, as you can see. So we are around that area. So now the next question is, will price respect this trend line one more time? And if that is going to be, we want to be seeing selling pressure below the structure, probably on our lower time frame, to incite another wave of bearish momentum. So that is one possibility which we should be taking into consideration while we are looking at our lower time frame. Then the other possibility that could happen here, considering this engulfing bullish candle that we saw last week Friday, giving us a clue that buyers are still very possible strong in this market, we might likely see a situation where a breakout of the $11,700 level, a level which also shares a confluence with that bearish trend line, could incite another wave of bullish momentum. So if we have a breakout of that structure followed by buying pressure around that area, it will be a good sign that this trend line does no longer have the capacity to hold bearish momentum any longer. And if that's going to be the case, we will definitely be getting ready to buy the US tech. So now, with the informations we have here on the daily time frame, how do we maximize this structure? How do we take advantage of the structure for our own favor? So what we are going to be doing now is to scale down to a much lower time frame so that we can have a better understanding of what is really going on around here. Now, before I scale down to the 1 hour time frame, I would like to call our attention to a key structure here on the daily time frame, which we also need to take into consideration too as well, and that is the $11,500 level. Remember how this $11,500 level has been a strong buying niche for over 6 weeks. Between the month of November and the month of December last year, we saw how that level, every attempt by the sellers to break down the 11,500, had been met with strong resistance from the buyers, pushing price to the upside every time price gets into that structure. And not until mid-month of December last month, we saw the final breakdown of that structure. And from a technical standpoint, whenever we have a breakdown of a structure like this, there is a likelihood that price will come back to do a retest of that structure that was broken to incite another wave of price movement in the direction of the prior leading price action. And in this case, it is bearish. So looking at what has been happening here as soon as price got into this level in the last 6 to 7 days now, it's a sign that there is a level of selling pressure coming in gradually in this market. But because of this bullish momentum we saw here on Friday, we need to take a further dissection of what is really going on in this market on our lower time frame and see how participants in this market has been reacting to this current structure here since the beginning of this week. So the current structure we will be laying much emphasis on the 1 hour time frame is the $11,600 level. So what we'll be doing now is to scale down to our lower time frame where we want to be seeing things more clearly. So remember, we have identified the $11,600 level as an area to look out for trading opportunities for this week. So now this is the 1 hour time frame here. And this is the $11,500 level, a level which we identified on the daily time frame as a key level that has been holding bullish momentum for some time before the breakdown of that level happened, which I talked about a couple of seconds ago. Now, since the beginning of this week, we have seen a situation where price has been caught within a beautiful channel, which we shall definitely be using to guide trading activity for this week. And what channel am I talking about here? So this is where price started this week. The week started on a bullish note as we saw price started from the $11,590 level here and continued to climb up, doing a test of the $11,640. Then we saw selling pressure come in from that level to give us a beautiful channel between the $11,640 and the $11,590 area. Now, whenever we have such a channel like this, you know what we normally do. We want to remain patient to look out for a signal that will be giving us a clue into where price action will be going for this week. So what are we going to be looking out for here? The first one is if price breaks out of the resistance level at the 11,640, this will be a good sign for us to buy the US tech for this week. And if the contrary happens, that is price breaks down the $11,590 level, it will be a good opportunity to sell the US tech, at least in the meantime. And if we take into consideration this impulsive move that started on Friday last week, we saw how price continued to climb to the upside, hereby getting caught within the channel here. It's looking more like a trend continuation pattern. You could call it a bullish rectangular pattern here. And if this is going to turn out to be a trend continuation pattern, then a breakout of the $11,640 level should be a good opportunity for us to buy. So for the sake of clarity, let's label this area. So we buy the breakout retest of the structure. Okay. And the other scenario is if price breaks down the 11,590, like the 11,590, 11,600, whichever one suits you. We have sell breakdown retest of that structure. So now if a breakdown of that structure happen, I would likely want to see that as a retracement of that previous impulse leg here. So if a breakdown of the channel happens, then we might likely continue to guide our position as price action drops to the downside and move our stop loss accordingly. And as soon as price tests the $11,500 level, remember how important that structure is on our daily time frame, we move our stop loss accordingly to lock in some profit and wait out and see how price action will react to this level to decide what our next line of action will be. Remember, this is a bullish momentum here. We might likely see buy pressure come in at 11,500 to incite another wave of bullish momentum. So we need to be very, very careful. So as soon as price gets into the 11,500, move your stop loss accordingly, lock in some profit and wait out to see how price action will react with this level. And if at any point in time price breaks down the 11,500 followed by selling pressure below the structure in our lower time frame, then we want to be adding more position to our existing trade. So these are my views here on the US tech for today. So let's anticipate these possibilities. You can munch my screen and use it as a reference point when you're about to make your individual decision on this commodity. And one thing I should lay emphasis on is the fact that we have a simple setup here between the 11,640 and 11,590. So we are going to be looking forward for a signal of a trading opportunity at either a breakout of the structure to the upside. Then we are good to buy if price breaks out that structure, and the support level for the week is sitting at 11,590. If price breaks down that structure, we want to be thinking of selling. So these are my views here on the US tech. If you have any questions, feel free to drop your inquiries in the comment section, and rest assured that I am willing to be of help in that regard. Okay. So I'll be checking the comment section from time to time to see if there are any questions while I move on to the next pair. So 1134, greetings to you too. 952, good morning. Techno System Lab, good morning to you too as well. All right, so in the absence of no question, I will take this as a confirmation that we are on the same page here. So let's move on to the next pair we will be reviewing for the week, and that is going to be the GBPUSD. So now talking about the GBPUSD here, I have a position triggered here already, but let's quickly look at what we have here on the daily time frame, from which we shall be deciphering what we want to be doing for today. So to make things a little bit simpler for us to understand here, it's better I give you some background into how this trade has been going so far in the last 3 to 4 months. Now look at the structure we have here on the daily time frame and look at what has been happening here since the month of September. We can see how price action has been following a bullish trend, and when we connect the series of higher lows here, we have this bullish trend line figured out. And since the beginning of the year, though we saw some level of selling pressure around the 1.200 level at the beginning of the year, but we saw that as soon as price tested the 1.200 level, the 1.1900 level here, which also shares a beautiful confluence with that bullish trend line. We saw some bullish momentum began on the 6th of January of this year. And with the temporary demand zone sitting here, we joined that bullish momentum to the upside before we were caught up within a consolidation phase here a couple of weeks ago, and we took advantage of the breakout of the structure last week. So right now, price is back at a critical point right now, which is the 1.2400 level, a level which has been a strong selling niche in this market for as far back as 6 to 7 months now. Look at what happened here in the month of May. We saw the breakdown retest of the structure. We had a selling pressure began. We saw again here, though we had a little breakout of structure here, price action came back, break down that structure, retest that level again in the month of June, and since then price has been trading below the 1.2400 level, hereby emphasizing the strength of the sellers in this market. Now look at what happened here in December. Though we had some bullish momentum which brought price back into the structure, but immediately price tested that level, we saw another wave of bearish momentum, in fact a huge engulfing candle, emphasizing how strong the sellers are around the 1.2400 level. Now last week trading session, we witnessed a situation where price came back into that structure. In fact, the last 3 days of last week, we saw how sellers continue to reject all attempts by the buyers to break out of that structure. As you can see with the nature of these weeks here, you can see it emphasizes that sellers are still very strong around this area. So what we are going to be doing now is to scale down to our lower time frame, and let's see how price action is reacting to the 1.2400 level since the beginning of this week to decide what our next line of action will be. So looking at the structure we have here on the daily time frame, if we start seeing selling pressure on our lower time frame here, then we should definitely be getting ready to join another wave of bearish momentum to the downside. And if price breaks out of that structure to the upside, then we will definitely be looking out for buying opportunity. So in that regard, now let's scale down to the lower time frame. Let's see what is really going on here. Now I would first of all scale down to the 4 hours time frame, where I was able to identify some structures which I think we can use to guide trading activity for this week. And here on the 4 hours time frame, well, the first thing we observed is here is that price action has been bullish, which we shared on the daily time frame since the beginning of the year. See, this is what happened. So since the beginning of the year here, we saw price continue to find higher highs and higher lows here. So we have this bullish trend line to guide our bullish momentum. However, as price action got into the 1.244500 level and the 1.2400 area, we have been seeing selling pressure from that level. So we might likely see price probably come back into this bullish trend line to incite another wave of bullish momentum, or we could see price break down the bullish trend line to incite another wave of bearish momentum. And one thing we should also take into consideration while plotting our plans for this week is the fact that price has been caught within a channel here between the 1.2400 level and the 1.22350. And during the early hours of this week, we saw a breakout. On Friday last week, we saw a little breakout of that structure, which I'm not sure if it's going to be a false breakout or a true one. Now, if we scale down to further down to the 1 hour time frame here, this is what I was able to identify here. So at the beginning of this week, this is what has been happening here since the beginning of the week. Remember, price closed around the 1.2400 level at the end of last week. So we have a new support level. As we saw, price started the week on a bullish note. We saw the bullish momentum begin above the 1.2400 level. Price climbed up to as far as the 1.24450 level, which we shall be calling our resistance level for this week. So we have the resistance sitting around the 1.24450 level and the support level sitting around the 1.2400 area. So we have a channel, and whenever we have structures like this, you know what we always look out for? We look out for a breakout or breakdown of that channel to give us a signal of where price action is going. So if price breaks out of the 1.24450 level, we look out for buying opportunity to join that potential rally to the upside. And if price breaks down the 1.240 level, it will be a good opportunity for us to sell. And what we have here, I already have a sell position triggered, as we have a sell stop at this point in time. And if you are taking advantage of the sell position here, kudos to you for being on standby to catch that move. And let's see how far this bearish momentum will go. So if you had sold up below this structure here, your stop loss should be somewhere around the 1.24400 level with about 40 pips thereabout. And let's see how far this is going to be going. So for me personally, I will be looking at around the 1.22500 level as a TP target as we continue to monitor price action. So what I'll be advising us to do here, if this bearish momentum continues in our favor, then as soon as price gets into the 1.22350, we move our stop loss accordingly, lock in some profit, wait out to see how price action will react to that level to decide if we are going to be adding more position to our existing trade, or we are going to be getting ready to join a trend continuation to the upside. Remember, we are on a bullish momentum here, and the sell position we are taking below the structure is more or less considered to be a counter trend opportunity. So if price gets into the 1.2322350 level here, look at how that level shares a confluence with that bullish trend line. As you can see, we might have some little consolidation phase around here, so we move our stop loss accordingly. And if this level continue to give us buy pressure on our lower time frame, then we will be scaling down to a much lower time frame like the 5 minutes, 10 minutes, 15 minutes time frame to look out for reversal patterns like a double bottom structure, inverse head and shoulder pattern to join a potential trend continuation to the upside. But if that does not happen and instead price breaks down the 1.22350 level, a level which I said shares a beautiful confluence with that bullish trend line, then this is a sign that the bullish trend line does no longer have the capacity to hold bullish momentum. So we shall be seeing this as a bearish signal, and if selling pressure continues below the structure, we'll definitely be thinking of adding more position to our existing trade. And if a further breakdown of the 1.22500 level happens, we want to be adding more position at the site of selling pressure below that structure. So let's be on standby to catch these moves. This structure here has a tendency of giving us multiple entries, so we really want to be part of this journey if price continues to go to the downside. So at this point in time, you might want to readjust your stop loss, because price action has a tendency of coming back. You know, from a technical standpoint, whenever we have a breakdown of structure, there is a likelihood that price will come back to do a retest of the structure. It could come back into this area, it will come back to do a retest of the 1.2400 level with selling pressure below that structure. And if that happens, we want to be adding more position to our existing trade. So these are what we are going to be looking forward to on the GBPUSD for today, as we have a simple channel between the 1.24450 level and the 1.2400 area, which we shall be using to guide our trading activities for this week. So if you have any questions regarding the GBPUSD which I just explained, feel free to drop your inquiries in the comment section, and I am willing to be of help in that regard. And with that being said, let's dive into the next chart. And the next chart we are going to be looking at is the XAUUSD. So I prepared something for us here on the XAUUSD, which I think will be a very good trading opportunity that we could take advantage of. But before I go into the details of that, let's run through what has been happening here. And for the sake of clarity here, I will just start from how the new year started, and this is what we have here on the daily time frame. Last year, December last year, we saw this 1820 level being a strong selling niche for participants in this market. As you can see here, every attempt by the buyers to break out of the structure had been negated by selling pressure from the bears in this market. As you can see here, we continue to see selling pressure here till the end of last year. However, at the beginning of the year, we started seeing some traction from the bulls, as a breakout of the $1,820 level was a very beautiful signal for us to buy the XAUUSD at that point. And lucky enough for us in this community, we were part of this move as we continue to ride the bullish momentum all the way up. Price break out the structure at the 1,860, broke out the structure at the $1,900 level last week trading session to continue to find higher highs. Now, things got a little bit interesting last week as we saw that as soon as price got into the broke out above the $1,900 level, we saw this consolidation phase between the $1,940 and the $1,900 level to emphasize some level of indecision in this market. And if you look at the structure critically, you would agree that a retracement is long overdue at this point, considering the impulsive move that started this year. From a technical standpoint, we should be expecting some retracement phase, which is a reflection of profit-taking activities. So those who are taking advantage of this bullish momentum right at above the 1,820 at the beginning of the year will definitely at one point will want to be taking some profit. And when they will be taking some profit, what are we going to be saying? We are going to be seeing a retracement back into probably a technical structure like our golden zone area, which I consider to be between the 50 and the 78.6% of the previous impulse leg in anticipation of another wave of bullish momentum. So are we really going to see a retracement phase for this week? This is one question we need to be asking ourselves. And if we are going to be looking for a retracement phase here, a counter trend opportunity, then I would likely want to see price breaks down the 1,900, a level which has been a strong demand zone throughout last week here, break out that structure, take out all the buy position here, gather some liquidity for selling momentum with selling pressure identified on our lower time frame, then we could actually join that decline to the downside. And from a technical standpoint, when we look at the breakout of the 1,820 here at the beginning of the year, we expect that one point in time price is likely going to come back and do a retest of that structure to incite another wave of bullish momentum to the upside. And what makes this 1,820 more interesting is the fact that it shares a beautiful confluence with that bullish trend line that has been guiding bullish momentum since the later part of last year. So that is one perspective we shall be looking at for on our lower time frame. Then the other possible situation here is that this consolidation phase here could transition into a trend continuation pattern. And if we take into consideration this engulfing candle within this channel here, this is what happened on Thursday last week, we might likely see price break out of the resistant level here at the 1,940 to incite a bullish momentum. So we should keep an open mind on this one, even though we're thinking of looking out for selling opportunities below the $1,900 level here. We should not ignore the possibilities that the bulls could take the sellers out of this position, break it out of the 1,940, look out for buying pressure above the structure on our lower time frame to join a trend continuation to the upside. So in order for us to have a plan for today, how do we take advantage of this opportunity on our lower time frame? So the next thing I'm going to be doing now is to scale down to a much lower time frame. Let's see how participants in this market has been reacting to the $1,940 level since the beginning of the week to decide if it is appropriate for us to sell from below the 1,940, and if the selling momentum continues, then we will be adding more position at the breakdown of the 1,900. So let's see if a sell position could be triggered around this area, or we could be getting ready to buy from that point. So in that regard, I will be scaling down to the 1 hour time frame here so that we can see things more clearly. Now, on the 1 hour time frame here, this is what I was able to identify after monitoring how participants in this market has been reacting to the $1,940 level since the beginning of the week. So the week started on a bullish note initially. So we had a situation where price started around the $1,924 level here. So we saw this bullish momentum climb up into this area And as soon as price got into the $1,935 level here, we started seeing some selling pressure coming in at that point. So because of this, I identified the 1,935 level as my resistance point for this week. As you can see, we saw selling pressure around that area during the later part of last week trading session here. And at the beginning of this week again, we saw selling pressure coming in from that level. So that is a beautiful sign that sellers are still very strong in this market, and there is a likelihood that we might be witnessing a sell-off, which will be reflected on the chart as a retracement phase to the downside, breaking down that structure. Then another thing I also took note of is the $1,924 level here, which has been a strong buying niche throughout the trading session on Friday. We saw that after breaking above this level, buyers had continued to negate all selling pressure. Every attempt by the sellers to break down this level has been met with strong resistance from the buyers. And as you can see, at the beginning of the week, we saw buy pressure coming from that level. So for this week, I have a beautiful channel which we are going to be using to guide our trading activity, and that is the $1,935 level, which is the resistance point for this week, and the $1,924 level, which is going to be the support level for this week. Now, with the situation we have here, we already cited a breakdown of the 1,924, a beautiful signal that sellers might likely be taking over this market anytime soon. And with the breakdown of the structure here, taking out all the buy position at this point, I took a sell position up below that level. And at this point, I'm actually in a loss right now, but I'm still of the opinion that if price action continues to respect this trend line here, I will continue to feel comfortable in my sell position. So I would like to extend this bearish trend line further to the downside so that it will be able to cover the future expectation on the XAUUSD here. So for those who are taking advantage of this move, and if you can afford about a 800 pip stop loss somehow, you could be comfortable in your sell position. However, if you had missed out on this opportunity, well, you can still wait out for price breaking down the 1,924. A sell stop order sitting below the $1,924 level could be a good opportunity to join that decline to the downside. So as long as price remain below the $1,930 level here, a level which has traces of selling pressure in the past here, as you can see, I will continue to look out for selling pressure here, and breakdown of the $1,924 level should be a good confirmation that you want to be adding more position to your existing trade here on the XAUUSD. So these are my views here on the XAUUSD as I continue to look out for selling opportunities here. And remember, to make things simpler here so that you can have things a little bit simple for you when you are trading this during the New York session, we have two parameters here, two structures here that will be guiding our selling opportunities. Now, the first one is this trend line. After connecting the series of lower highs here, so I have a trend line here figured out. So I will continue to feel comfortable in my sell position if price action continue to trade below that trend line. Then the other structure we shall be using to guide our sell position is the $1,924 level. If price continues to the downside, breaking down that structure, we will remain comfortable in our sell position. And if a further breakdown of the bullish trend line happens, we should be seeing that as another opportunity to add more position to our existing trade. Please note that as soon as price tests the bullish trend line here, we want to be moving our stop loss accordingly to lock in some profit, as we never can tell what could happen around this level. So that is my view here for selling opportunities on the XAUUSD. And another thing I would like to say here, that in as much as we continue to hold on to a bearish bias here, we should not ignore the possibilities that buyers could come in at this point. Anything could actually happen, and one thing we don't want to be doing is to be lagging behind on this one. So we want to have an open mind so that we can take advantage of the contrary if it happens. So how do we know if a bullish momentum will be established from this current structure? Now, we are going to be using that bearish trend line as a yardstick for bullish momentum as well. That is, if price breaks above that trend line, breaks above the $1,930 level, then we might be seeing that as a bullish signal. Remember, we are not getting too excited at this point in time. considering the fact that we have been witnessing selling pressure below the 1940 level since the later part of last week's trading session. So even if a breakout of this trend line and the 1930 happens, it's still not sure that this is going to be a bullish momentum. As you can see, every attempt by the buyers to break out of the $1,935 level since last week has been met with strong resistance from the sellers. So even if a breakout of that level happens, we want to remain patient to look out for buying opportunities. Probably price comes back to do a retest of that structure or the $1,930 level with buy pressure above this level on our lower time frame, then we could look out for buying an opportunity at that point. And if this leads to a final breakout of both the 1935 area and the $1,940 level, then I want to feel very comfortable in my buy position at this point. Then if a breakout of that level happens, it is welcome to add more position to our buy position. So you can see what I'm talking about here. It's quite easy to identify. So we continue to use the $1,930 level here and the bearish trend line as a yardstick for trading activities for this week. So these are my views here on the XAUUSD for today. If you have any questions, feel free to drop your inquiries in the comment section, as I'm already running out of time. I have 5 minutes left, and this is likely going to be the last pair we are going to be discussing for today, and this is going to be the pairs we are going to be monitoring for this week. So if you have any questions, feel free to drop your inquiries in the comment section, and I will be willing to be of help in that regard. I will be checking the comment section from time to time while I do a quick recap of what we talked about today. So let's run through the pairs we did today on the exchange speed. So the first commodity we treated this morning is the US oil, and on the US oil we identified a simple setup here, which we said we are going to be using to guide our trading activity for today, and that is the channel between the $81.80 level here, which is serving as a resistance level for this week, and the support level sitting at the $81.20 area. And you know what we are looking out for? We're looking out for either a breakdown or breakout of this channel to give us an opportunity to either buy or sell. And I told you how I got my position triggered above the $81.80 level as we saw a breakout of that structure, and in fact we already have another breakout of the $82 level, which we need to see on the 15 minutes time frame to be sure if this is truly a breakout. And if for the sake of clarity, let's scale down to the 15 minutes time frame here, and currently see what is happening on the 15 minutes time frame. Price has continued, so we saw the breakout of the $81 level here, $81.80. Price came back to do a retest of that structure, and I hope you joined at that point in time as price action did a retest for us, giving us a further confirmation that the buy position is good at this point. So if you are taking advantage of that, kudos to you for being on standby to catch that move. And now we have a breakout of the $82 level, and if buy pressure comes in above the structure again, we want to be adding more position to our existing trade. So our bullish buyers appears to be falling in place for us on the US oil for this week. So let's remain patient and continue to look out for more opportunities to add more position to our existing trade. So that is that on the US oil. I wish you best of luck on that one. Then we went on to talk about the US tech for this week, and on the US tech we also have a simple setup we have identified here, and that is a channel between the $11,640 level here, which is a resistance point for this week, and the support level sitting around the 11,590 level, which is our support level for this week. And one thing I said here is that we are going to be looking forward to either a breakout or breakdown of this channel to give us an opportunity to sell. So if price breaks down that structure, we look out for selling opportunities, and if price breaks out of that structure to the upside, we look out for buying opportunities. And taking into consideration this impulsive move that started last week, that is this impulse leg here, leading to a consolidation phase here, this might turn out to be a trend continuation pattern, which might break out of the 11,640 to incite another wave of bullish momentum. So with the current structure here, I'm tending towards a bullish momentum here, and that is why I have a buy stop above the 11,640, looking out for buying opportunity there. But in as much as I look forward to buying opportunity, we would ignore the possibility that we might be going through a retracement of that impulse leg that started last week into our golden zone area before an anticipation of a trend continuation happens. So let's be on standby to catch either of this move that happen, and I wish you best of luck on that one. Then we went on to talk about the GBPUSD, and on the GBPUSD we already have a sell position triggered here, and price action has continued to move in our favor. And for those who have been part of this trigger, kindly move your stop loss to your entry point just to secure your position against any sudden pullback that might happen here. And for those who are not in this trade yet, well, let's look out for another opportunity in the form of a retest of structure to incite or join the trend continuation to the downside. And one thing I told you about the bearish momentum here is the fact that we have a structure here at the 1.22350 level, which shares a beautiful confluence with that bullish trend line that has been guiding bullish momentum on the GBPUSD since the beginning of this year. So as soon as price gets into that structure, we want to be moving our stop loss to lock in some profit while we wait and see how price action will react to that level to decide if we are going to be adding more position to our sell position, or we will be getting ready to join a rally to the upside. So these are the things we are going to be looking forward to around the structure. The first one is if we start seeing buy pressure around this area when you scale down to your lower time frame, like so if we start seeing buy pressure around this area, if price breaks down the structure with selling pressure below that level, it's going to be a very beautiful opportunity to add more position to our existing trade. So these are my views here on the GBPUSD, and I wish you best of luck in that regard. Then we went on to talk about the XAUUSD, where we saw a bearish signal at the beginning of this week as we saw price action break down the support level we identified earlier at the $1,924 level. So we saw the breakdown of the structure, which is a very beautiful signal of a sell momentum here, and I told you I took advantage of that opportunity there, though I'm in a loss right now, but I still have the hope that price will still come below the $1,924 level. And to guide our sell momentum on the XAUUSD for this week, I have identified two setups, two structures we shall be using to guide trading activity. The first one is the $1,924 level. We want to see price below the structure to be comfortable in our sell position, and we also have this bearish trend line that has been guiding selling momentum since the later part of last week. So if price action remain below the structures, we shall remain comfortable in our sell position. And for those who are not already in this trade, I have told you that below the $1,924 level here is a very good opportunity for us to join that decline to the downside. And there is a catch here. If price gets into this bullish trend line, which I said has been holding bullish momentum since the beginning of the year, we want to move our stop loss accordingly, wait out and see how price action will react to that structure to decide if we are going to be adding more position to our existing trade if price breaks down that structure to the downside, or we are going to be getting ready to buy if we start seeing buy pressure above this level on our lower time frame. Now, I told you something about this current structure here, that in as much as we are looking forward to selling opportunities for this week, we should also have at the back of our mind the possibilities that buyer could take over this market, and what are the things we are going to be looking out for to confirm that buyers have come to stay in this market. So what I said is that we shall be using the trend line. We shall be using the trend line and the $1,930 level here as a yardstick for buying opportunities. So if we get stopped out in our sell position and price breaks out of the 1,930, remember I told you we shouldn't get too excited. It could be a false breakout. All we want to be seeing is price do a retest of the structure, and we look out for buy pressure on our lower time frame. Then we could join that rally to the upside. Now, if price action breaks out the 1,940 and the 1,935 level, which has been a strong selling niche for some time now, at that point I will be comfortable with my buy position, as a breakout of the structure will be a beautiful opportunity to add more position to our buy position here. So these are my views here on the XAUUSD, and I wish you best of luck on that one too. I think that's the last. Did we talk about the USD JPY? I don't think so. We didn't talk about that. So we only treated the USOil, the US Tech, the GBPUSD, and the XAUUSD for this week, and this are going to be the pairs we shall be monitoring throughout the week. So I appreciate your attention here. Thank you very much for being around, and I hope you are able to screenshot my screen so that you can use it as a reference point when you're about to make your personal decision during the New York session today. And one thing I normally say at the end of the session is this: we don't want to get too excited. Whenever we have a breakout of structure, immediately we scale down to our lower time frame, like our 5 minutes, 10 minutes, 15 minutes time frame, to look out for retest of structures supporting the direction of the breakout. And if that happens, then we want to be comfortable taking that position. So on this note, I wish you best of luck during the New York session, and I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review the financial market, review how well the pairs we have been monitoring since the beginning of the week has been doing. Do have a wonderful evening. Bye bye.